Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we're going to talk about the EIA data and the other data that keeps coming out around the world and try to put some understanding around where we are, what are the flows on oil as well as refined products, because as we always stress, it's important to look at both sides to see what is actually happening in the world. And then there's also a lot of different crude grades, what crude grades are doing what, which ones are mattering the most at this point in time. And so when we look at the different backdrops, we want to look at how crude builds have accelerated. They increased in both the US and in Europe, but distillate draws continue, and really want to, and we've talked about this considerably an extensive amount of time. I don't know, maybe I don't use the right titles, but some people are like, oh, when are you going to get bullish crude? It's like, well, I'm just showing you the data, but we've been bullish diesel for a very long time. And if you listen, going through this, you would have been long diesel and there would have been a lot of upside. It has outperformed crude on a sizable way, especially because, again, what Saudi is doing is they are taking the heavier and medium barrel out of the market. So if you are buying Brent and WTI, that is not a heavy barrel. That is not replacing what is coming out. So again, it is what it is. It's financial markets versus physical markets. It's hard to obviously get exposure to the heavier side, but that's one of the ways to do that is diesel, because of the heavier barrels have a heavier distillate cut. When we look at distillate storage in segment 2, we're going to show you in the US on how distillate storage continues to fall further. The diesel markets continue to tighten, even though there's not a lot of demand. And this is what we keep trying to stress, because we talked about demand. Demand is well below where we were in 2021, in 2022, in 2019, 2018, 2017. This is not a demand story. Demand is terrible. Anybody who is looking at their bank account and their credit card statement and saying, everything's fine, you're probably in the 1%. The other 99% of America and the other people that are staring and watching their savings that are now gone from COVID, staring at the inflation side, which is going to ramp up again, which again, another place that we've been dead right and called perfectly. It is putting stress on people. It is increasing the pain on people, which is reducing demand. Supply is also a part of this equation. This is a supply side. Just think of it this way. Let's rephrase this. If Saudi didn't cut 1 million barrels a day in September, where would crude be? Crude, they maintained their cut in September. They then said that they not only could extend it, but deepen it, and Brent is at 86.50. Where do you think it'd be if they didn't say it? So again, that's a demand problem, because demand is not there. So if they said, you know what, we're going to pump that 1 million barrels a day additional in September, crude would go down 5. So it's you might be saying, well, what is driving this higher? It's the Black Sea. For some reason, I will never understand this. Wheat is down because apparently everything is fine on the wheat side, but then crude is up because of the fear around the Black Sea. Again, I don't make the rules. I'm just explaining what is happening in the market. So when we're going to round it out with how Saudi raised crude OSPs again. Not only have they cut runs for September, but they've also increased OSPs, but they're also ramping refined product exports. And we want to, again, look at both sides of the equation, because you have to weigh the two sides when we look at the different pieces. So now the other piece, when we look at where things are, as you can see on total oil and product stockpiles, surplus now are from 65.3 to 57.6. Crude stocks, land and floating, the surplus now are from 70 to 54.3. That will, again, as we've talked about, reverse a bit higher. And as you can see, we'll set a new, this is only going back to the gray cloud is 17 through 19 and then 2022. It will now fall outside of that cloud because of the amount that's in floating, the amount that has come back into land storage. And then total product stockpiles flipped to surplus. They went from negative 4.7 to 3.3. And as we keep stressing, it's because of gasoline. Gasoline is not in a good position globally. The U.S. is different in the sense of we're tracking very close to the 29-year average. But when you look abroad, there is a lot of light distillate and gasoline that is sitting there in a level of storage. Vortexa is now out. So far, we've heard from Vortexa, FGE, and I think there was one other that has shared similar opinions. Crude export cuts by Saudi Arabia and Russia are pronounced, but dampened by limited cooperation from others in OPEC Plus and strong supplies in the Atlantic Basin. Again, the U.S. continues what they're doing, like what Saudi is doing, is fantastic for U.S. exports. So it's just going to keep us flowing consistently into Europe. It's keeping us competitive into Asia. So again, you're just going to continue to see the flows. It's going to support us at that 3.8 million barrels a day of flow. Somebody on Twitter, one of our favorite energy tourists, said that misspoke accordingly, saying that we were shipping 5 million barrels a day to China, which is impossible. We physically can't actually reach that number from the U.S. Our maximum was 4.2 million barrels a day. They finished dredging. We're up to about 4.5 million barrels a day. Not that we've hit it yet. And again, it's just it was those numbers, especially the export numbers, as we've talked about countless times over countless years, that is a very fungible number because exports are time delayed, time sensitive, time delayed, paperwork delayed, a lot of issues when you're looking at purely that number, which is why we stress so much the 4-week rolling average, as well as some of the boat scrapers and boat data that we've focused on. Saudi exports in July were 900,000 barrels a day below 2022 average. Combined exports from the two countries are down 1.6 when you're looking at obviously Saudi and Russia. Russia crude oil curbs are largely counterbalanced by higher product exports and in any case are in line with the country's typical seasonal trends. Real Russian cuts may be closer to 200,000 barrels a day. For anybody that's been following us or read our insights, we said that Russia's cuts are anywhere between 200 and 250,000 barrels a day. So again, that's just consistent with what we've seen. Saudi-led efforts also countered by higher exports from outside OPEC, with the Atlantic Basin, with Brazil is now at a record. Norway and Johan is at a record. So again, there's opportunities around there. Total land storage flipped to deficit from a positive 11.1 to a negative 7.4. That will get closer to balanced. So you look at land storage, we're going to be right at the average. So not too much movement there. The west of Suez flipped to deficit, went from positive 11.5 to negative 8.5. That will get much closer to the average, but again, it's going to stay just below the average if you look at where Europe was, as well as the U.S. And then east of Suez flipped to surplus from negative 4.4 to positive 1.1. That's Japan. When you add in China, it is actually a bit higher. So again, there's still a significant amount of crude that remains in the east of Suez. Now, when we look at floating storage, surplus widened from 44.5 to 46.2. Not too much of a shift. West Africa is still very high. Middle East is still very high. West of Suez, when you look at the surplus narrowed from 5.3 to 4.5, that was driven by Europe. The U.S. has a little bit excess, which is why we see those imports, again, starting to increase just a bit in the PAD 3. East of Suez, the surplus narrowed from 25.1 to 21.4. So again, when you look at just the east of Suez, things have drifted down a bit in Asia as we've had an increase across the Middle East. When we look at the adjustment factor, because people like to point at this, you can see that it was fairly muted. Typically, and if you're starting to watch the trends, the adjustment factor increases throughout the month because, again, exports don't really catch up until you get to the end of the month when things have to be filed for that month, for the next week. And that's typically when you see that big snapback, which is why, again, this isn't some nefarious thing. It's just the way the algorithm does and the way they track the data. Crude stocks rose. We had a build of 5.85 million barrels across storage. That's just 3.2 million below the 5-year and 13.6 million over last year. You can see that Pad 3 had a big build of 5.09. That's 6.2 million over. Then builds pretty much everywhere else. Pad 2 had a small draw, but Cushing, as we were saying, was going to kind of flatline, small build of 160,000 barrels. When you look at crude oil into the aggregate SPR, here you can see that we went from 5.85 to 6.85 because we do get some small builds. And again, we've tried to highlight this multiple times. Here is purely we're getting a increase of 1 million barrels because remember the first few tranches we lent out the crude, we did not sell it. So it has to come back with interest. So again, that's why we will see some of that coming through. The production had a crazy spike from 12.2 to 12.6. Again, we're not at 12.6. We're something a bit lower. But again, we were also weren't at 12.2. So again, it's just a matter of some of that fungibility back and forth. Crude oil inventory excluding SPR, we're sitting still above where we were in 2019 as well as 2021. So again, just, and above where we were in 2022, we're just going to continue to go sideways. We typically do see a decline when you look at the 29-year average, which is why we have that number. So you can see that we typically decline. Instead, we're just going to kind of flatline here and just bounce back and forth just because we don't have refiners that are ramping up to the same degree that they have in previous years. Total U.S. commercial oil storage and products, again, sideways. We don't see that changing. It'll be more of a sideways move, as we've been saying. We do have more exports coming from Europe, especially on the gasoline front. So again, that's going to help keep us a little bit higher on the gasoline side, but the distillate side is not a good situation. Crude oil inventory for Pad 3, as you can see, it's above where we were in 17. It's above where we were in 21. It's approaching where we were in 2016, which, if you remember, that was during the price war, which put a lot of crude in storage. So not too much to say. The only time it was higher than today was 2016 and 2020, which were not exactly good years to be compared to. But it also comes down to what's in storage. If it's light sweet crude, it doesn't matter because we need heavy sours and we need mediums. And that's why we look so much to the international market, or we look so much to Canada, because we don't have the right crudes in general. Here you can see that we've flatlined right around that 2021 level. And it's, as you can see, it usually comes down, starts to flatline. We don't see that changing too much, especially as we get a little bit more imports from Canada. Here you can see runs increased to that 1.1%. It went from 92.7 to 93.8. That's really where we should be. We should actually be a little bit higher at this point, starting to trend back to 95. You can see Pad 3 is kind of maxing out here. Pad 2 came back a bit after some of their unplanned downtimes, but we don't see a huge surge at this point in time when you look at it in comparison to previous years. Looking here, we're just below where we were in 22. You can see that there's been several years higher, but we're right kind of where we should be at this point in time. We thought there might have been a chance to get back to about 95, 96%. That's unlikely at this point. Now we're getting closer to that, just holding that 93.5, 94.5, and holding that until we get towards really the end of August. And then you'll start to get a little bit of a waffle. And then you start to see more longer, planned downtime really ramp up as you go into the end of September into October. So then when we go to the next level, imports increased 15,000 barrels a day. The lumpy ones had a bit of an increase. Obviously, Pad 1 increased 338,000 barrels a day. Pad 5 increased 151. Pad 2 was down slightly, 81,000 barrels a day, but still above the 5-year. That's going to remain the case. And then Pad 3 had a drop of 224,000, but just based on what's in floating storage, again, you're going to get a bit of a snapback, which again is very much in line with previous. Then when you look at the numbers in general here, you can see it's moving down with the seasonal trend, but just what's in floating storage will get a little bit of a bounce. It's still going to stay below the 5-year. It's still going to stay at the low end of the cloud. So again, not too much has changed in that regard. Pad 2 staying at the high end, as we've been saying, it's just going to stay above the 5-year. There's a lot of demand for that heavier crude. They're going to pull down as much as they can, specifically into the Pad 2 region. So not much has changed in that regard. Implied demand had a nice bounce. When you look at gasoline went from 8.8 to 9.3. One of the things that we've been saying is we were expecting to average between that 9. We initially thought we were going to average 9.3 million barrels a day in the summer. And then we took that down and we said that we were going to average between 9.1 and 9.2 million barrels a day. When you look at Gas Buddy has us at about 9.03. TomTom and some of the other ones have us at about 9.1, 9.2. So again, this was 8.8 probably too low. Probably, it was 9.3 too high, slightly. But it's just going to kind of balance out. Distillate dropped 64,000 barrels a day. That's likely to have a bit more downside. And then when you look at gasoline, again, this is school starts to ramp up. And back to school. So we really have peaked and we're past peak activity just because school picks up in the South, in the West, in the Midwest. So typically as we get to August 15th, or for this year, it's not August 15th. Let me just pull up August 14th. Is where we'll get a lot of people back in school because they typically start at the first week of August and then second week and then third week. And then there's a lull where, because in the Northeast and other places, we don't go back until after Labor Day. So again, we're past that peak component. When you look at propylene dropped 82,000 barrels a day, right in line, close to the 5-year. We don't see too much of an adjustment at this point in time, just given the slowdown on the petchem front. Gasoline, here you can see the bounce. One of the things that we've been saying is we expected to get back to that blue line, which is the average. The average is actually closer to about 9.4 million. So we're still below the 10-year average. We're tracking pretty close to where we were in 22 when you look at kind of some of the bouncing that we've had here, and it just shows that we still don't have the same level of buying. And then the other problem that we're facing is we're seeing a fairly sizable increase in price, which again is going to hinder some of that underlying demand. Days of crude supply, again, fairly normal. This will reverse back up just because even though rates have gone up, crude stockpiles have also risen. We look at gasoline storage. As we've been saying, it's going to flatline a bit. It'll waffle up and down. It's not going to be a perfect straight line. It's just going to waffle. We are getting close to where we were in 2022, where we kind of had the same situation. We thought we were going to get a bit of a run up and then come back down and then really go sideways. Here, we just have been hugging this level. We don't see that changing, just given the demand cycle. Where distillate is drawing again, these are longer counter-seasonal draws that we don't like to see. This is a problem when you look at how we're setting up into the end of the year, and this is mostly driven by Pad 1, and Pad 1 being the East Coast relies significantly on heating oil. Jet, as you can see here, has been going sideways. It's going to be that balancing act between kerosene, distillate, so not too much to change. And then when we look at the crude curves, continuing to be in backwardation. Again, you're going to see more crudes moving, especially from the U.S., just because our exports are competitive. So we're going to be at a very high level with those crudes supporting flows into both Europe and elsewhere. And then when we look at the Gulf Coast floating storage, you can see that it turned a bit higher. And again, it's just that timing delay, which is why we will see that this flow back in. We will see a little bit of an increase in Pad 3 exports, not back to the 5-year, but just a bit of a bounce as we try to manage and find ways to increase that distillate cut. The distillate cut, just given, the diesel crack is far superior at this point to gasoline. So you're going to try to make as much diesel as possible, try to minimize some of that gasoline side, especially when you look abroad, which we'll talk more about in segment 3. And then the next segment, we're going to go deeper into what's happening with U.S. demand and how things are wrapping up for the summer.